Welcome to Transforming Industries, the interview podcast focusing on industrial transformation, technology, and what M&A has to do with it. My guest today is Oscar Wallner from MTEK Industry.
I'm not sure if there is such a thing as a mature market, generally. When people talk about mature markets, like to remind people of, Kodak, Nokia, Ericsson in more recent history. To me, when you talk about mature markets and players that have been in a large industry for 20, 30 years, I'm more inclined to think, great, people are asleep at the wheel, right? Let's do something different. And that's an opportunity more than a threat as I see it.
Transforming Industries.
Today we are diving into the MES or Manufacturing Execution System market, and I'm doing this together with Oscar Wallner from MTEK Industry. We will discuss how a young company like MTEK managed to enter a quite mature market segment such as MES. We will learn how a tech segment not only interrupts other industries, but how itself can be disrupted. We are discussing recent market and technology trends, take a closer look at the highly dynamic competitive landscape, and as Oscar is not only the Chief Commercial Officer of MTEK Industry, but has himself a background in investment banking, we for sure take also a closer look at the M&A landscape of the MES market. But enough said, welcome to Transforming Industries, Oscar. Great to have you here in the podcast today.
Thank you very much for having me.
Oscar, before we dive into the MES market, MTEK Industry, maybe you can introduce yourself a little bit to the audience before we start.
Sure. So I'm the Chief Commercial Officer for MTEK Industry AB. We'll get to that later, I'm sure, but it's a software company out of Sweden. My background is a little bit different. I'm not an industry manufacturing guy by trade or training. I'm rather a banking and finance guy, much like yourself. So I come at this from a slightly different perspective. Started out with Lehman Brothers back in the days and worked with different international banks, Nomura City, in the US, Middle East, Europe, etc. So that's my background.
Okay, great. Oscar, we mentioned MES already. I think before we start, maybe we have some listeners who are not so familiar with that term. MES means Manufacturing Execution System. This is actually also the market that MTEK Industries is in. Maybe you can give from your perspective, and I think it's even good, a non-technical perspective, right? What MES covers.
Sure. So MES is a fairly broad term that people tend to interpret slightly differently.
Yeah.
In my mind, what it comes down to really is organizing events on the shop floor and making sure that you help companies figure out what to do, in what order, by whom, where, with what machine, with what settings, with what quality control parameters, etc. Right? We take a slightly broader perspective on this, which we'll get back to, I'm sure, in terms of how we think about structuring the work on the shop floor, how to leverage the data, etc. But I think, in essence, controlling what happens on the shop floor is what MES is all about.
Okay, great. And yeah, we already mentioned MTEK. So maybe you can give a quick overview of what MTEK especially does, industry serves, key milestones of the company, and also a little bit more exploring on your role in the company.
Sure. So MTEK is well, maybe I'll do a little bit of background first. So we started out in 2002 as a consulting company in operational excellence, helping companies do everything from designing and launching products to DFM, DFX type work that's designed for manufacturing and designed for excellence. It's a footnote to that's potential non-technical listeners. Did that for close to 15 years. After that, we moved into software-defined automation. It was a little bit sort of towards the electronic space, but generally for discrete assembly of high precision assembly with high mix, so fairly complicated stuff. And then relatively quickly, around 2018, transitioned into a broader view, which is really around, okay, great, we have this automation solution. That's great, but we're solving for a local optimum with the operational excellence consulting mindset that the company came from, it was obvious that was not enough. We need to focus on, what is the end-to-end kind of global optimum for a production line or a factory, right? Depending on how you scale it up. Which was really what spawned MBrain as a product. So segueing into that part of the question, what is MBrain? What does it do? Well, effectively, similar to MES, it controls what's happening on the shop floor slightly differently. It tries to take a holistic view on what's going on the floor. It maps out the sequence of events in building an entire end-to-end process. Sounds obvious, but probably isn't from the way that these systems are typically constructed. It's not just about collecting data here, here, and here. It's also about having an expected outcome of what's meant to happen here, here, and here. Once you have that, you can also very easily measure deviations. And it's really, operational excellence is a lot about the deviations from your expected outcome and finding those sources of variance. And that's kind of what we specialize in.
Okay. And actually, you started a company, you said the company started in 2002, then moving slightly toward software. Okay. Did you have, or is the company bootstrapped? So is that all by the founders financed themselves? Or did you take, especially at the step when developing software, did you take investors on board? Or how was that?
The first few years of transitioning from consulting into software-defined automation and then subsequently into pure software was bootstrapped, funded by the consulting operation initially, which brought us to building the first product, launching the first product with the first customer, etc. From there on, sort of around the summer of 2019, so let's call it 4 or 5 years ago, we have had external investors on board. So the cap table at the moment looks like most sort of Series A type of startup type of cap table. A couple of industrials, a couple of VCs, natives.
Okay. I think one thing that I found very interesting also when we met the first time, you mentioned already that you started as a consulting company. If we look at the MES market overall, it's a fairly mature software segment, right? It's many of the companies already started late 80s, 90s. I think with a very different type of software than MTEK and other newcomers in the market are doing. It's interesting. It's still very fragmented, the market. Actually, how important do you think was it starting as a consulting company and having potentially a different view on that segment than if you would have started from the beginning as a technology company? Did it help you shaping the idea of what is missing in the market and how could we position the company?
I think it's fundamental to the approach that we've taken. And I think it's also fundamental, by the way, not just in product design, but also in terms of how we engage with and communicate with our clients, right? Where our conversations tend to be very focused on how do we create value, and what is your problem look like? Once we figured that out, we try to apply the appropriate technology to it, right? Even to the point where we sometimes question clients on, okay, so you say you want to connect machine X, Y, Z and extract all the data. What production value or production outcome are you looking to achieve with that? Is it actually necessary? Or is it just another form of waste, but in a digital form, right? But coming back to where you started the question, as you know, I come from a similar background to you in terms of finance, et cetera, and strategy. I'm not sure if there is such a thing as a mature market, generally. When people talk about mature markets, I like to remind people of, Kodak, Nokia, Ericsson in more recent history, et cetera, right? were probably operating a mature market. Nokia had close to 50% market share in mobile phones when I started my career in investment banking. They don't anymore, right? I'm not sure if you go to Wolfsburg or Detroit and ask the people there if their market is mature. I'm not sure if they would agree.
Yeah.
BYD produced 3 million cars last year, something like that, more than Tesla, right? So to me, when you talk about mature markets and players that have been in a large industry for 20, 30 years, I'm more inclined to think, great, people are asleep at the wheel, right? Let's do something different. And that's an opportunity more than a threat, as I see it.
Okay. Maybe staying with that point, before we go a little bit deeper into certain technology aspects, like when you compare, like I said, the companies that have been founded late 90s or early 90s in the MES segment to what's coming to the market right now, would you say that is an evolutionary step, just to give a perspective for people who are not that familiar with that segment? Or would you say it's more like really saying a disrupting or a revolutionary approach to that segment?
So I think generally there are two things happening kind of at the same time. So one is there is not just in the MES space as an isolation, but generally there are a number of enabling technologies, foundational technologies that are available now that simply were not 20, 30, or even 5 or 10 years ago.
Yeah.
That includes, of course, the proliferation of things like cloud computing, which helps scalability. Assuming you address the security concerns, etc. But that's one aspect. Clearly, in the last couple of years, the artificial intelligence, I think it's fair to say, revolution is presenting very, very interesting new opportunities and ways of working with the data that you've gathered on the shop floor. So those things enable a different approach to something like MES. There's always a challenge, I think, in scaling a technology like MES, because it is, by its very nature, a cyber-physical type of system. Right? You engage with the IT systems, whether it's the ERPs or the PLMs, from together the data that you need to deliver the orders to the shop floor, or whatever PLCs or sensors or tools or machines, printers, whatever you may have, which is the physical part. That is always a challenge when you talk about scalability. But there's a lot happening there too, with new protocols being launched to the market, and there's a degree of standardization happening there too, which is another type of enabling technology, like things like MQTT, OPC, UA, etc. Right? Mm-hmm. So that's certainly helping. And I know there are a few newer ones that launched just now in Hanover, like Morgo, for instance, etc. So that's happening. But those are all enabling technologies. But I think the really interesting changes in markets tend to happen when there is a new set of enabling technologies coupled with a new way of bringing the product to the client. Mm-hmm. Scalable foundational technologies coupled with user-friendly technology. Think Spotify. Right? Spotify couldn't really have happened if you hadn't had a smartphone and 4G. Well, it could have happened, but not to the same degree if you're walking around with a computer that needs to be attached physically to a cable, right? It's a different experience. There's something similar happening in the MES market right now, I think. So you have all of these foundational technologies that are coming into the market, available to everyone, of course. At the same time, as people are launching systems that are much easier to integrate to, whether it's IT or OT. So you really get that IT-OT convergence that people have been talking about that hasn't really happened. Mm-hmm. It's starting to happen now. You get technology that is accessible from a practical perspective to people on the shop floor. That's why things like a no-code interface becomes so important, right? Because it actually makes it usable, right? Business models, I think, are super critical in this aspect as well. How do you charge for things? Are you introducing barriers to helping your clients stay up to date with their system on the shop floor? Because this is also, another aspect that I think is kind of critical here is shop floors change every day. right?
Mm-hmm.
New kites in. What do? Do we buy a new system? Do we live with this for another 5 years as this singular monolith that we defined 5 years ago? How to live with that another 5 years? This is why the flexibility of the user interface, the flexibility of the business model is so important. Mm-hmm. Couple that with easy integrations and a scalable backend, then you get something that is starting to look, to answer your question, probably a little bit more like a revolution than an evolution.
Okay. And actually, like all the technology developments that you mentioned and the way how actually the applications are brought to market, is it also like when you look in the past, like I think MES systems have been fairly introduced to larger companies. I think automotive industry was, I mean, in general, in terms of automation, always a little bit in front. Does it also help you to address new customer segments like that
absolutely.
Maybe in the past that were not be addressable with the more monolithical systems? Or?
Absolutely. No, I think you're spot on. So to my mind, legacy MES was built for very large factories where you had economies of scale coupled with typically regulatory requirements for things like traceability and quality assurance. So we're thinking about things like, the large automotive OEMs. We're thinking about things like aerospace and defense. We're thinking about pharma, stuff like that, right? But I would argue that if you look beyond those types of companies, MES in the way that I'm thinking about it, at least, which, and in my mind, MES should be a system that's really permeating the shop floor, every workstation, every machine, every material movement, all of that kind of stuff, right? That's just not there. And I think the reason for that is the time and effort and cost that is associated with deploying these systems simply makes it, out of balance for your typical manufacturer. I have this sort of rule of thumb that I like to test with people. I'll try that with you as well, mm-hmm. see if you agree with me. So if you exclude the large automotive OEMs, the aerospace and the pharma that we talked about just now, and you take the typical industrial widget manufacturer, right? And you take the group revenue and divide it by the number of manufacturing locations they claim on their website that they have, which is very often in the hundreds, by the way. You're going to end up with a value per average factory of somewhere around $100 million, give or take 50 million or so.
Okay.
And if you think about what that, just mathematically, what is the cost a factory that does $100 million worth of output can carry before they say, oh, no, it's just too much money, I can't do it? Roughly. Well, let's put it this way. You're not going to give away 5 or 10 percentage points of your revenue, right? You're not going to give away half or all of your net income from that factory. If you're the factory manager, you just wouldn't do it, right? So you need to come up with something that is actually achievable and doable from both a financial and practical perspective, ideally just using the resources that people have. And I think this is, when you achieve that with technology and business model that we discussed a moment ago, I think you're going to open up a much, much larger portion of the manufacturing market to this type of technology.
Okay, and I'm staying with that point. So what I understand or hear from that is that actually what you are addressing in the market is rather, let's say, new customer segments or customers that don't have an MES in place today than addressing companies that maybe have already introduced something in the past?
Not necessarily. I'd say, so I think a large portion of the market, for sure, like you described, probably haven't had anything that, at least to my mind, represents what an MES should be, right?
Yeah.
At all, right? They typically do as much as they possibly can with their ERP, and that's good, right? They probably have some machines and PLCs that are collecting data, and maybe they have some MES module from their ERP, etc. But that's different from what I'm thinking about. If we can go back to that later, sort of what I think an MES should do more specifically, but that's certainly one portion of the market. But when we are in discussions with larger companies that have MES systems in place, and when you get into the very, very large companies, they typically have many MES systems in place, right? The legacy MES. When they see what's available on the market and the effort and cost that it requires to deploy it, their reaction is very often sort of, okay, so if this does everything that my legacy MES will do, why would I add another zero to my bill? Right? That just doesn't make any sense. So even if you have it, I think you want to go for the nimbler, more operationally friendly and more cost-effective solution. So to my mind, both of those markets are open.
Okay. So we are already addressing right now the market topics, because what I find interesting, if you look at the MES market, what I said, it's a fairly mature segment in terms of when you think of how long the systems are in the market. But if you look, I mean, there is typically, like when you look at research reports, there is a huge span in terms of projection of overall volume, right? So I have figures around like 18, 20 billion until 2028. It always depends whether you include implementation services, consulting or not. But I think what remains stable across the reports is like the growth rates, right? And these are continuously, let's say, above 10, 12, sometimes 14% annual growth rates, which is quite interesting for a fairly mature market segment. So like the shift in the demand and also addressing new demands, is that for you some of the key growth drivers in the market? Or what do you think makes the market, or current trends in the market, that makes the systems growing, or the demand for the systems?
So there are probably a few different growth drivers, the way I see it. So one is regulation, right? Where more and more regulatory demands are being put on more and more parts of the value chain, right? And complying with regulation gets really expensive if you don't have something like this that basically does it for you, right? In terms of data collection and quality assurance, etc. So that's probably one driver. Another driver, I think, is one of those enabling technologies and some of the new solutions on the market. And possibly speaking for myself, of course, but I think that's certainly driving demand for this. I know I've spoken to some of the founders of some of the other newer MES type of solutions on the market, and we all agree that. Well, first of all, we agree that there's plenty of room in the market for all of us. So whatever we do, let's collaborate in showing the market there's a new way of doing this out there, right? But another driver, I think, is AI. To be honest, I think that's especially from the C-suite, the CIOs, the CDOs, that level have a lot of interest in leveraging the power of artificial intelligence, not just on the shop floor, but when you start meshing that with other enterprise data, it starts to get pretty interesting. Starts to enable things like a real, true digital thread, not just within the factory, but from your supplier to your own manufacturing to aftermarket, and that starts to get interesting, right? I think that's driving, and I've had a couple of those discussions, especially with larger manufacturers, where they start with sort of a smart factory type of initiative or something like that, which is a little bit more digital, if you like. And then they quickly realize that, whoops, we're sort of lacking this foundational data layer here in our factory, right? what we need is something like an MES, right? So I think that technology revolution in AI is another driver. I also think the aging of the workforce matters, right? Because one, it requires more training and faster onboarding of new frontline workers. I think people also expect higher churn in their workforce than they used to, which matters. So here I think the new generation of MES, including our own, is a complete game changer in terms of onboarding people, helping them understand what to do, also quality assuring what they do, such that, a new employee is way less likely to make a mistake and cause a quality escape than they otherwise would have been. I think that's another driver of this. And then there are other things like I think the geopolitical situation that we have, which requires more flexibility in terms of moving production around, being able to quickly ramp up. So you have that sort of digital blueprint, if you like. I don't like the word digital twin because it tends to sort of give people the wrong idea and all start thinking of 3D renditions rather than, a digital replica of your production process, which is different in my mind. But those are some of the key drivers, I think, in terms of, requiring these sorts of systems.
When you mentioned workforce, I mean, adding maybe something, I see that also in other segments, like, for example, in robotics, the whole no-code development. How do you see that? Because what you also see in Germany, I think that's not the only market. You have the whole labor shortage around IT skills, right? So I think that is also a huge booster, right, for expanding the number of peoples that are able to develop solutions or implement solutions, right?
Yeah, 100% agree. Aside from just the labor shortage, the ability for a skilled manufacturing engineer, who are the people who really have the knowledge of what goes on, what can go wrong, how do we prevent it, they should be able to work with a tool like this and build new processes, deploy new processes, change things on the fly. They do a Kaizen event on the floor, a couple of clicks and drags and drops, and the system is up to date according to that new reality, right? So I think that's crucial. And granted, we get a new generation of workers coming into factories that are probably more digital natives, and many of them probably know how to code. But even if you do know how to code, these systems are not trivial to code at all, right? And there are a lot of dependencies left, right, and center. Yes, you can have different approach where you have various sort of development toolkits, etc. But I'm a very, very strong believer in the no-code approach. Both for the availability of labor, but also for the speed of execution, the flexibility, which of course translates into total cost of ownership at the end of the day.
And I think another aspect, I had a few weeks ago another podcast recording where it was all about recruiting. Isn't it essential also today, in order to attract young people to a manufacturing company, to have, let's say, modern technology in place because I think if you look at generally compare industries, right? Gen Z, young people don't, I think, or many of them don't naturally have a manufacturing company in mind when thinking about future jobs. And I think if you look at fairs like Hanover Fair and other things, it's really amazing what technologies are on the market and how manufacturing could and should look in the future. So I think it's also very important, right, to attract people and talent to manufacturing companies to have these technologies in place, right?
I couldn't agree more. Coming into this industry as kind of an adult, right? Yeah, it's really quite shocking if you think about the value of the industry, how few people are true experts in it. I used to work with my previous sort of banking days. I used to work a lot with manufacturing companies, right? But it's a very different dialogue when you're in with the C-suite on financing questions versus how do you actually create value fundamentally on the shop floor? It's different, or generally in your operations, right? Not just in the shop floor. It's very, very different. Think about supply chain, etc. as well. So just a couple of weeks ago, I attended a seminar here in Stockholm that Microsoft hosted, and their chief commercial officer was giving a talk in the introduction, and he said that today nobody would ever hire a person and not give them a PC to work on. And I thought to myself, that's exactly what we do in manufacturing. That's exactly what we do, right? We spend lots of time and money buying hardware and analytic softwares and displaying OEE for our machines. But even in highly automated environments, some between 30 and maybe 50, 60, 70% of the work where it touches the product is a human being. And we forget to capture the data from what's going on with them. So I think, yes, it helps to engage the younger workforce, but also from a production flow perspective, from a data connection perspective, from an analytics perspective, from a quality assurance perspective, having these softwares in place really helps, right? And but having said that, once we deploy these systems and we speak with the operators and they say, if you take this away, I'm going to quit. Right? Even the older ones, right? First, I'm a little bit skeptical. Oh, is this going to, is the digital overlord, blah blah blah, that kind of thing. But once they get used to it, like, no way I'm going to go back to pen and paper or whatever I had before, or logging into 5 different systems, whatever their reality was, right? So, yeah, I think it's important.
Yeah. Okay, maybe to stay with 2 more technology trends. We discussed already the new business models and cloud. Actually, how do you see it today in the current environment, especially if you think about smaller companies? Do you see already the acceptance for cloud-driven application and business models, or is there still a certain percentage of companies saying, I want to have all my stuff on premise. I don't feel safe bringing my data into the cloud and my applications.
So absolutely, we see that. And for us, MTEK as a company, we cater to any type of deployment method, whether it's cloud, on-prem, hybrid, private cloud, whatever you need, we can do that, right? So from that perspective, we're agnostic, you might say. Having said that, we do see operational and cost advantages to leveraging cloud deployments. And typically when we say cloud, we're not talking about co-mingling data, that type of cloud. We're talking about maybe deploying in in your Azure tenants, right? That is already inside of your IT controlled environment. So it's an environment that you're comfortable with anyway. I'd say the divide is not so much between, at least from my experience, between large and small. The divide is probably more between regulated and unregulated. So people who are in regulated industries with highly sensitive data, especially if we're talking about, again, going into things like aerospace and defense, etc., people start getting a little bit nervous, right? For good reason, you might argue. They're pretty stingy or particular, let's say, about how they manage their IT security environment overall. So this is no different from the way they handle anything else. I would also say that there's generally, if you go to the large and small axis, smaller companies, and especially if you go for the very, very small, they tend not to have the resources for IT, management. They might not have a, let's call it, mature IT environment to work with. So for those types of companies, we also offer a similar IT environment that we host, and we give them access to. But I think the regulated aspect is probably the clearest divide in my experience. It's also funny, right? Because you talk to companies like, oh, we can't have this data in the cloud, etc. And then 2 weeks later they email you the drawings and everything to start sending. It's like, well, where do you think you just put it? Right? So yeah.
Okay, and another aspect that I would like to address, and that gradually translates already into also the competitive environment, is convergence of different tools.
Yep.
So when you observe the market, you see also in terms of acquisitions, for example, that ERP, MES is starting to migrate more. Same might be with PLM, especially IoT platforms. You have discussions around. So how do you see that as an evolution in the market?
Well, I think over the last couple of years, the bigger acquisitions in the MES space have been more in from the hardware people buying software people. I'm thinking about ASM buying Critical. I'm thinking about Rockwell buying Plex. I'm thinking about Siemens buying whatever was left of Aviva. Those types of transactions, right? That makes sense to me, both because of the IT/OT convergence and the ability to software define hardware, which again comes back to this speed of deployment, total cost of ownership, etc. Right?
At the moment, I mean, less the purely M&A driven perspective. This is, I think, something that more reflects what's happening in the market. I mean, in terms of applications and for the users, like that. If you no problem. If you think about MES, so you can read MES is developing more towards a platform approach. You have IoT. So these two things, just taken as an example, are much more growing together, or one is replacing the other. How do you see that technology?
One question on that topic that I fairly frequently get from clients is, how do we see the SCADA layer, right? Is that necessary going forward, or will that be an integrated part of MES? Probably depends on the MES solution, and possibly also how you deploy it, right? Because some of the applications that something like a SCADA would take care of are very, very time sensitive, not appropriate for cloud, for instance, right? So there you might need some kind of deployment on the shop floor just from a latency perspective. So that's one that I think will gradually converge. That just makes sense to my mind, that you do one integrated shop floor deployment that includes both the integration to hardware somehow layer and the MES layer, or the execution layer. That sort of, in a way, kind of also includes the industrial IoT layer in my mind. I mean, certainly in our solution, we have both a no-code application which is sort of an industrial IoT platform to integrate to shop floor equipment. We also have a no-code, even patented platform to integrate to the IT landscape, right? So for that, for sure, ERP is a bit of a different beast, I find. ERP systems are, I think, by nature more, that they were born as true enterprise software. I think most MES systems were born as one shop floor at a time type of softwares, right? They also tend to sort of cater to many different types of companies. I personally, at least in theory, it's not something that we are building today, but there should be a really good MES for manufacturing companies. I'm not sure if there is. A really good ERP companies. There are a couple, but I think they're built from a different perspective, different logic, right? But maybe the more you proliferate things like MES, and this is actually something that we do see in our deployments and discussions, right? The more you rely on MES on the shop floor, the cleaner your ERP deployment gets. Right? So you save a lot of time and money on your ERP setup and deployment and maintenance if you leave the shop floor to the MES. That's been our experience for sure.
Okay. And then you already started, I think we are directly jumping now into the competitive landscape, you already mentioned a couple of topics that have started to increase the dynamics also in the industry, right? You mentioned already some hardware-driven industrials that have entered the MES space in the past, like Rockwell, Honeywell, whoever you mentioned. You also had in the past like larger tech companies entering the segment. So it's already some time back when SAP acquired MES. So you have a very broad mix actually of players into the market, like really this huge industrials now entering, tech companies, originally founded MES companies, right now companies like MTEK, like advanced MES companies coming new to the market. How do you expect the market dynamics? I know it's like kind of guessing, but how do you first of all, how do you see competition in the market? So what is actually when you talk to clients in your segments, what type of companies are you seeing as competitors?
Well, competition in my mind is a little bit different depending on which type of client you're speaking with. But by and large, I think you have a couple of different buckets of types of players in this market. So one would be obviously most of the big ERP systems have some kind of MES module, which of course is, if you were running that ERP, that might be an obvious choice for you. But then you have the typical Gartner Magic Quadrant type of competition out there, which is where I'd say most middle-sized companies and upwards kind of default to when they start looking for systems like this, right? Most of those are, of course, the legacy vendors that we've been talking about, that have been around for 20, 30 years, whatever. There's relatively little in terms of innovation in that bucket, I think. But it's what people default to. And then there are, I've seen a lot of those or a couple at least here in the Nordics and across Europe. Local MES solutions that sometimes they're pretty decent solutions, to be honest. But they might cater to a small number of clients, and then they never really had global ambitions, right? So if you think about the company like MTEK, yes, we're younger, but from an ambition perspective and then in a reach perspective, we're already competing effectively globally against the Magic Quadrant type of players. Then there are also, and I see two different types of approaches from clients, which also steers where they go for solutions. A minority, and to my experience, a clear minority of clients are going for the very kind of appified architecture, right? Where you find one application that does machine connectivity, one that does work instructions, right? Because it seems easier, I think. So if you're speaking with a client that prefers that kind of architecture on their shop floor, there's a whole plethora of solutions for that, right? And then we should never forget about Microsoft Excel and Post-it notes. They are also very big competitors in this space. Still, 3M with Post-it notes, probably one of the biggest. Yeah.
Exactly.
So, so there's still a lot of pen and paper whiteboards, right? A lot. But by and large, you have ERP systems, you have Magic Quadrant, and then you have the local vendors that could be good if they happen to be next to your factory, right?
Yeah, two aspects that I would like to add or dig deeper in. You mentioned already the ambition of a company. So in that perspective, how important is it directly to develop, let's say, a ecosystem, right? You use also like implementation partner system for a young company. And how do you position yourself against established players? So that would be, I think, interesting. I think also interesting on a more abstract level, because I think that is a case for many younger companies in more mature industrial software segments, right? So we are not talking about consumer industries, but B2B. So I think the partner system to create around you is very important, right?
Really? I 100% agree. 100% agree. So it's a bit of a nut to crack. I think it's the kind of thing that before you have, from an external perspective, earned your right to get the attention from the ecosystem, you don't get it. So it's a bit of a binary situation from that perspective. Once you have, at least this has been our experience, and I'll try and bring some level of abstraction to it, but I think once you have proven yourself, once you've been up against the Magic Quadrant type of players, for instance, that people recognize a couple of times and won, that opens the floodgates, right? So when people see that there's something new and different that is able to compete effectively, people suddenly get very interested, right? I think when you're building the kind of complex B2B enterprise software solution that MES effectively is, you will need that ecosystem both for reach, you will need it for implementation and support over time. The trick is to find the appropriate ecosystem for you, depending on how you want to position yourself in the market. So depending on whether you have a strategy, and here's where I'm trying to get a little bit more abstract about it, right? Yeah. Depending on if your strategy is to cater to the very, very largest companies around, that probably necessitates one type of ecosystem. If you're going for, especially we're talking about SIs, if you're going for SME, it's probably a different kind of market, and you'll also probably be building your product even more to self-help, right? And have it more the product-led growth that you, or something more akin to that you might recognize from the consumer space. Then so that's like more on the SI side. I think on the other parts of the ecosystem, and this is probably equally true whether you're talking about things like the hyperscalers, or if you're talking about other software and or hardware players in the market. Nobody in this space does everything. That's just the nature of the beast. Yeah. There will, so depending on what your client wants, to have an ecosystem of everything from, super high-end analytics, or, you can point them to a visual inspection system or whatever it might be that they're looking for, right? Or for that matter, we talked a little bit about or at least touched on the digital thread aspect, right? If you have someone who's really good at aftermarket that you're kind of already integrated with and have a collaboration with, that's where people can understand how to use each other's data maximally. I think that ecosystem starts to look very, very interesting, right? Because from your own selfish perspective, you want to have reach and you want to have scalability of your solution without necessarily adding headcount. From the client's perspective, you want maximum value from the applications that you buy, and you want to spend minimal amounts of money on things like, integrations, which doing and managing integrations is effectively another form of waste, right? So you want to minimize that. So the ecosystem, I think, is crucial, and I think will become even more important over time. The hyperscalers are definitely recognizing this and building platforms to help people do away with these hurdles, help them, again, and sort of mesh data from different sources and do this type of thing. Of course, that necessitates a cloud deployment. But,
definitely, yeah. Okay, and I have to come back again to M&A in my own nature, right? Sure. I mean, if we look at the overall market, I have just some figures for the German market. So we have here 140 solutions from approximately 120 vendors. And we've seen in the past several, you already mentioned, acquisitions in the market. And we are always talking about a consolidation wave. So maybe it's not a wave at the moment, but it's continuously, you see over the last couple of years, continuously a transaction in that space. How do you expect that to continue or even accelerate? Because I mean, at some point in a more mature market, yes, you can open it up again with new technologies, but at some point, in order to scale and to reach a certain size, especially the appetite from the large players, from my perspective, naturally there needs to be a more consolidation-driven approach in the market. How do you see that?
I agree. I think there are, from an M&A perspective, if you look at this type of company, right, and without mentioning any specific one, but once you reach that first level of sort of critical mass for a company like this, and if you look at what it does, just from purely financial perspective, right, you're probably looking at long contracts. You're probably looking at relatively high margin cash flows tied in for probably a couple of years or many years. Probably with a bit of spice, if you like, from a service component. Traditionally, I think the service component is sort of 90 to 70% of the cash flow. People dress it up as something else, but it's actually service if you talk about things like support, etc. If you're looking at a modern MES solution, you're probably expecting 70 to 90% software revenue and the rest service, right? So that's different. So it'll be even more attractive to a financial investor. High quality, long cash flow, low customer churn. I mean, it's very, very attractive just from the perspective, and coupled with that high market growth. And if you're in an up and coming company, you'll probably be seeing that. So if you have, what did you say, 15, 20% market growth, something like that, you're probably looking at 50 to 100% for an up and coming MES player, type of thing. It starts looking very attractive from a financial perspective. Add to that the consolidation in the market. What does that provide if you're a financial player? Well, it provides an exit opportunity, right?
Exactly.
So whether it's an IPO or if it's a trade sale, you have the building blocks for a very strong business case there. I think if we going back to the technical aspects, right? We talked about IT/OT convergence. Why do we have the IT companies, the ERP players, etc., and the hardware companies, the Siemens, the Rockwells, etc., all coming into this space? Well, it's probably because of the IT/OT convergence, right?
Right.
Where everyone is wanting to kind of, okay, so I've staked my ground here, right? I want to move here, right? And I think this is, if you look at the legacy market of MES, they typically come from one of those two angles, right? They come from the ERP space, going down to the shop floor, or they come from the OT, the PLCs and the whatever, and they try to move upwards towards the software solution. And then the fragmented market probably has something to do with the fact that the manufacturing market is really fragmented. There's just a lot of Germany is a great example. German Mittelstand, right? And there's a very, very similar dynamic in the rest of Europe as well as in the US, right? There are lots and lots and lots of kind of mid-sized companies that are not necessarily part of the a larger enterprise, right? And then also, given that, as I think we mentioned before as well, MES has typically not been built to be multi-factory. Right? Historically, it hasn't built to be multi-factory. New solutions are, for sure, and legacy systems are going there too. But then it didn't really matter. You didn't get any scalability benefit from using the same system across all of your factories, right? Whereas now you do. So is that going to create a few more winners on the enterprise MES side? Yes, I think so. I think so. And that's why, when you build your solution and your business model, I think what the market is craving for is that lightweight application from an application management perspective, but with a heavyweight capabilities of the traditional MES. I think that's the sweet spot, right? If you can find that, I think you can stake some really new territory. Needless to say, that's what we're all about.
That gives me the point. Like, I think we had a great discussion on all the topics. For the outlook on your sweet spot, so what can we expect from MTEK in the next coming years in terms of what is your ambitions? Where do you want to go with the company? What maybe new technology features, applications can be expected? If you could give a short outlook on that.
Sure. I mean, as a company, we focus on discrete to start with, right? And in that space, I think we've been, without boasting too much, I think fairly successful in especially when we compare to other solutions out there. We're very appreciated. I think generally the discrete market has been a little bit underserved. Many systems tend to focus on the more process-like and the food and bev and the pharma and whatever. I think what we would also want to focus on is we talked about that typical industrial widget manufacturer, right? Whether that's HVAC systems, pumps, automotive tier one, aerospace and defense, that kind of stuff, right? Is where we expect to have a lot of growth over time. As kind of a market segment. What we also see is in the greenfield type of industrial operations that we're seeing a lot at the moment, especially in stuff like green tech. There, I think we are also likely to continue to do well. We have a couple of those companies in our portfolio already.
Okay.
They obviously have a need to be very fast in terms of time to market, given that the massive investments that many of these companies do initially in their lifetime, they don't really have time or money to hit the market with bad quality products. So they tend to recognize the need for this type of software, from day one, right? So that's also a growth market for sure for us. I also, just from a secular growth perspective, the aerospace and defense industry is clearly doing well at the moment. So that might be another one. But in terms of the product and the new features and functions, look, I think this is another benefit of. We didn't talk much about it, but the way that we approach the development of our platform is we don't build point solutions, right? That solves one problem. We try to zoom out a little bit and look at the capability that clients are looking for in software, and then we build those solutions that are flexible enough so they can be deployed slightly differently depending on what your reality on the shop floor might look like. What that does is that initially, and I think we saw this for the first couple of years of development that we did, our development was pretty expensive. It took quite a long time to build a foundation of a flexible platform that allows you to do that. That was not trivial, right? Once that was done, the pace of development really started to accelerate. And what it enables, when you don't build point solutions, but rather another software company in a different space calls a value compounding platform, because that's effectively what it becomes, right? When you can start adding to your production layer, right? When you can start adding features for quality, for CMMS, for product design support, etc., right? But all relying and out of the box interconnected with the foundational data layer from production, the value of the product that you're providing to your companies starts compounding, right? The more ways you're able to leverage that data, the more exponential value creation you get from the software without having to do those integrations that we talked about.
Okay. And you also mentioned in the beginning AI. So what role will AI play in your solution, or what do you expect to where it adds most benefit, where in the applications it will be integrated?
So I think there are a number of different ways to deploy AI. One is from the, we touched on it already, but the way that the hyperscalers have you do it when they sort of mesh data from different applications. I think that has a lot of room to develop in a very interesting way, not even in the far-fetched future, but very, very near term. Another, at least to me, but then again, I'm not a software guy. I'm a banker by trade and training, right? Slightly
Same
unexpected, slightly unexpected way of using, especially generative AI, is in the production preparation phase. We have it's not in generally available yet, but we have started working, for instance, with and tried and tested, and it works perfectly nicely. Build your processes by talking to the system. Integrating industrial tools by talking to the system, right? Which is a different level of user interface, right? And I think where that gets interesting is both in the time that it saves. It's probably not going to be at the level near term where you can just say everything and off it goes, both because it's an inefficient interface and also because you probably want to check stuff before you deploy it, right?
Yeah.
But what it can do is much like people are using ChatGPT, et cetera, today is, you can do this 80-20 thing, right? So it does 80% of the work, and the last 20 you have to do yourself, right? So that's an interesting situation that's absolutely constantly evolving. Another driver in this is the way that I think a system like ours will help you provide a more nuanced data state, right? So it's no longer just data from the machines, et cetera, or the sensors or whatever it might be. It's also it's data from, we like to look at it from the way that people do traditional root cause analysis: man, machine, material, method, measure, right? So not just machine, but also what are your people doing? What was their skill level? Which tool did they use? Was it calibrated? Which variant of all the trillions of variants in building was I building on when this happened, etc. When you start feeding the AI beast with nuanced data like that, disturbance analysis, what was my control plan? Which revision of whatever work instruction was used, whatever it might be. I think you're going to start getting some seriously interesting answers. We've populated some of those Gen AI models with this type of data, and nearly instantly they become like a manufacturing engineer. They ask the right questions and they get the right answers. So this is fairly nascent technology, but I see a lot of potential for how it can be deployed for sure.
Okay, so great. I think we come to an end. I think it was very interesting. I think what really showed that even in a more mature tech market, the outlook that you gave is there is still much more to come. And there are disruptive technologies that even can change and develop a mature segment. There is, if you take the right approach, a high chance, as you mentioned, maturity is good for entering a market, right? I think that is one of the key takeaways for me also, like a very interesting one, because you have several segments that actually are in a similar situation. So it was really interesting talking to you and seeing also what MTEK Industries does and how you're approaching the market. So thank you very much for your time, Oscar.
Well, thank you for having me, and best of luck with the podcast series. I look forward to enjoying every episode.
Thank you very much. Goodbye.
All right. Thank you. Bye-bye.
Transforming industries.
So, that was another episode of Transforming Industries. If you enjoyed listening, please leave us a 5-star rating on your favorite platform or recommend to your family, friends, and everybody else who's interested in the topics we address. Again, thank you very much for listening, and make sure you tune in again in 2 weeks for a new episode. All the best and goodbye.